Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday, it's September 9th. This will be our chart lesson for today. And big rally today. You can see we reversed off this, we bounced off that low envelope band on Friday and rallied straight up today. We took most of Friday's sell off back, not quite all of it, but we took a large chunk of it back today. Um, Will we get some follow through buying tomorrow? We'll just have to see. This is an inside bar, so it's hard to know about those bars. They can be, I mean, they can be, they're just not real reliable when it comes to. We could be just going to work sideways here, or we could get follow through, or we may even turn back down again. So we'll just have to see what tomorrow brings, but definitely a positive sign as far as uh, bouncing right where you would expect it to, right off the lower band. And I would think we would at least push up back to the midline again. We'll just have to see what's going to happen from here. But like I said, I still wouldn't be surprised that we don't test this, retest this high here. And so that could mean another leg up, similar to this leg, depending on where it starts from. Does it start from here? We don't know if that's the low yet or not. So it's a little bit early to tell. But we could make a measured leg up because a lot of times you'll get a break and two legs up to a new extreme. And so I still would expect that we're going to make a new extreme here. Will we make it as fast as we made this one? I don't know. So, and we could just turn down from here. It could go either way. So, but anyway, there's what today looks like on the daily chart. Very bullish. It looks a little wilder and crazier on the 2000 tick chart. We had a big early rally, then a big sell-off, and then we rallied back and sold off again, and then rallied back. Took a good bit of it back after the 2:30 hour. So a lot of that final rally, we didn't really get a chance to trade it well. So uh, because it was so late in the afternoon. But anyway, let's flip over to the 2000 tick chart. We'll take a look at it, and we'll go through the trades. Okay, real quickly before we get started on that, on the chart lesson, I did want to mention our second entry indicator. Uh, I've talked about this about a week ago. I'll start mentioning it occasionally. I normally don't hawk our wares here on the videos. This is not what I do these for. But several people have suggested that not enough people know about our second entry indicator, and it basically just points out second entries. So go take a look at that. It's on our website. You can go to the home page and you'll see a link to it right there. And if you're having a hard time learning second entries, it's a great tool to help you with that. My thought process when we created that indicator is that it's just a temporary tool. It's like a crutch. If you hurt your leg, you need a crutch temporarily, but you don't want to walk on it forever. Eventually, you want to learn to walk without it. And so my thought process is if you really want to be able to become a good chart reader, eventually you want to read the chart without that indicator, but in the short term, early, it will help you to see them and spot them and learn them. Um, just understand it's not designed as a trade tool. You're not supposed to trade those second entries. It only points them out, and then you have to be able to read the context of the chart and understand what the chart's saying and seeing if the two line up. If they don't, then of course you ignore the trade. So it's not a trading tool. It doesn't make it easier to find winners or anything like that. It just points out clear second entries by the counts. And so it does help you learn to spot second entries. They're pretty simple once you kind of figure them out. There are some more complicated ones, but once you figure them out, they tend to, you shouldn't need that tool anymore. But it is a great learning tool to help you figure it out early on, especially if you're struggling with them. So a lot of what we do is visual, and this is a skill reading this chart. And my thought process on chart reading is that just like some people, have you ever seen these pictures? You can look at it and there's something hidden in there. And some people can look at that picture and spot it instantly, and some people can stare at that picture for days and never find, even if they know what they're looking for and can't find it. And if you're that person, one of those people, then you're probably going to have a hard time with your chart reading. It's just it's a visual. It's very visual. It's why that's the only reason we use um, Japanese candlesticks, because it's visual. If you're just looking at a regular chart, you got to look at that bar, decide what that bar looks like. But you can glance at this chart and tell every one of these bars open low and closed high because they're all green. And you can tell when the ones open high and close low because they're all red. And you can't do that with a regular bar chart. You need that. So as far as Japanese candles, we don't care about any of the Japanese trading thought processes or anything like that, or rules for that. We just use them because they're visual and they help you to glance at the chart real quickly and see what prices are doing. So make sure you understand that if you don't already. So no, we don't use these because we're following any Japanese trading rules or strategies or anything like that. So anyway, let's get to the chart lesson. You can see we rallied up strongly in the overnight, continued going higher. We got to close outside. Sometimes you can ignore those if they happen in the overnight hours because the trend will still continue. And you can see it did here until we got a break and a couple of legs up to a new high. Just for anybody new that can't see the two legs, they look like this right here. And you can see it's basically two measured legs to a new high, and then it's sold off. You got a little spike and channel down. It gets a break, and I'm betting these are pretty close to two measured legs. And you can see that again. It's real close. We got a lot of stems on both ends. If you took those stems out, they're probably really close. So you get a break again and two measured legs, and it reverses. And you get a break, and you get a little more than two measured legs here, and then it reverses. Break, and then again there's two legs down to a new low. Two measured legs, and then it tries to go higher again. So that's generally what you see is on a good trend is a break, and you'll get a move to a new extreme, and a lot of times it's two legs. And I can show you that over and over and over. There it is 3 times on today's chart alone. You don't trade off that, but if you get a setup and it's two measured legs, and you probably know you're in the right vicinity, you're thinking along the right lines. But anyway, you can see it. We had the trend up, break, two legs to a new high. Trend down, break, two legs to a new low. Trend up, break, couple of swings to a new high. It still wanted to go higher, and then down, break, two legs, and then we just kind of chopped sideways, and then off it took to the high and closed almost on the highs again. Crazy day, yeah. But let's zoom in here and go through the trades, and we'll wrap this day up. I'll try to zoom in. Sometimes I forget to zoom in, and sometimes I know it's hard for people to see. But 7 o'clock came just as we're trending down here and reaching the trend line. And we actually get a close outside, but we get a multiple test here. I would say there's at least a triple test. There's a little bit of room in between there, but it still doesn't matter. You get a break of this channel and a new low. I marked that one green on the triple test, quadruple test. Probably better off to wait on the higher low and see if you get a second entry. And you get both right here. There's a higher low and it's a second entry long. So I like that one. I really like this one. It actually breaks lower first and fails and turns up and goes straight out the other side. And that's almost a fully bearish bar. You could trade that on the engulfing bar if you wanted. This is close to being blue, but just simply because it was a first entry after such a big move down, I just counted it as a first entry, and so felt like you were most traders are probably better off waiting on a lower high here, or a higher low here. I'm sorry, be a higher low since we're trying to go higher. And then we're back inside this trend line. We do get another close outside here, and we're just working higher. And then we start working sideways. Now we did have a couple of closes outside and move to a new high here. So then you get this triple test. Now this did go higher, but it still closes well inside. I like this one, thinking we were going to catch the reversal there. It didn't turn out to be that way, but you're still just playing the range, and there's plenty of room there. Um, you get another chance here, but not a good enough signal bar. You get a failure out the low side here, but I felt like you needed a higher low here, and you just didn't get one that was tradable. In fact, you got a lower second, after pushing lower, you got a second entry short. Now you're back in the range, but we did push lower here, so you might still take that trade. I marked it green. The fact that it didn't get back to the highs is telling. That means, and we've already cleared out a lot of the uh, people going, all the stops that are in here. So you can see it runs all the way back down, and it creates this new trend line, this flatter trend line. We just don't get a real good chance to enter any of that. And you never want to trade a breakout on one of these unless you get a triple test of the upper trend channel line or range line. And we don't get that here. We only get one test of it. Maybe you can argue this. See, this doesn't even get back to it. If you drag this over, we got one test of it. Okay, maybe you argue that's a test of it, but it's not a good enough signal bar. It's just a first entry, so there's no chance to go long there. And you do get a close outside here as well. And it runs up to a new high, and then you get a second entry short on a lower high. And a big bearish bar. I like going short there. And if you catch that one trade, that may be all you need for the day. Drops down. This is an overshoot in my opinion up here. You can see that. Looks like an overshoot to me. We still came back and got a retest of the high, but in my opinion, that's an overshoot if we just drag this up. I mean, you might can still argue it fits there. But to me, that looks like an overshoot. That tends to fit better. And you can see we came back, pulled back through, and tested it right there multiple times before we went lower. And this is a spike and channel down. I don't see anything in here you could really trade all the way down to here. And you finally get a close outside, first entry. You make a new high here and get a second entry short with a nice signal bar. Let me just get this out of the way. You can see that very nice short there on the second entry. Runs down, and this, we tested this lows again here several times, and that's a second entry long with a nice signal bar. Look at the move down, first entry, second entry. So you got a break and a couple of legs down to a new low. You end up getting another one. But I like that being that far away from the EMA. It took it a minute. If you got a higher low here with a good setup, you might want to take it too, but you don't get that. And of course, you get a trend up, break, new high, and a reversal bar there. I like going short. I marked this one green because we've already had a break and a move to a new low. So we could be setting up something a little flatter here. So I still like that one, but it's a little more aggressive. You could count this as a congestion, so it looks like two legs up. So in my opinion, you can count that as a second entry, even though by the true counts it's a third entry. I like counting that as a second entry. And then we shoot back down here, and we do get a breakout, but it does not hold. And there's a higher low right here. I didn't mark it. This is really just congestion, so this is like a little breakout pullback. And it does break lower there and fail and turn up. Problem is, you have to wait till this closes, and there's just not much room back to the EMA or the support resistance, and it could act as resistance, and you might hit it and turn down again. You might argue for that to be green, but I'm just not super crazy about it. Again, I talk about this all the time. Unfortunately, you don't get a chance to enter this one, but these failed break lower, this would be considered a failed break lower because we had all that support. And the first time it falls below, it fails. Those are often, and be the same thing to the upside, a failed break higher. Those are often very important lows or highs for the day. And you hear me say that all the time. I know some people hear it because a couple of people have told me they've seen it lately and they can hear my voice talking about it in the back of their head. So I know some people hear it. If you don't hear this, make sure you hear it. It's risky. You got to know what you're doing. But if you can find a place to enter on these, I mean, look at that move. I mean, there's no reason you can't ride this all the way up until maybe here. And if you can get in on that, let's just say you get in there and you ride it up to the first bar. Well, just say even here, first bar that you get a close outside, they get a break below. I mean, that's 27 points. If it's just one contract, that's $1,400 almost. That's the kind of runners you got to catch sometimes. That changes your math. That right there will erase a lot of losers and put you into the money still, even with a bunch of losers. So I can't tell you how important it is to try to get runners when you can afford to trade the extra contracts. So it really it changes your math considerably. So, but it runs up, and I marked this one green just simply because once you get a strong trend like this, where you're just continually going higher and you get lots of little dojis and the corrections are just real shallow, you can just about enter on any signal bar off the key entry point. And that's a signal bar off the key entry point. Normally I'd say no, you can't take that, but in a strong trend, yeah. And if this one would have broke lower, you could have entered there. This one, it still would have worked. I'm a little less. I like that one less because it's close to having a close outside. It probably does have a close outside. It definitely traded way outside. Usually a few ticks outside, not a big deal. And when you're looking for a break, we're talking about a convincing close outside, and we don't get that till you're way over into here somewhere. Maybe right here you could say that's a convincing close outside. Even this one's not totally convincing. So, yeah, this one is close to being able to take. In fact, you might mark it anyway, but it's just so close to the high there. Of course, all these will probably be close to the high because the corrections are not very deep. So maybe you enter that one too. I'll mark it. And of course, you do get your close outside, move to a new high. It looks like we were going to reverse, and then you get a reversal pattern here on a new trend. So this trend looks like it's played out, and then you get that reversal. So I marked that one green. It's not the ideal spot. You're looking for a reversal. This is a reversal continuation pattern. It just continues the trend, and this really confirms it. So this is a little early to be looking for that, but that's going to trap people almost guaranteed because you get the break, and it looks like two legs up. If you measure from here, it really does look like a break and two legs up. We didn't quite have two legs. So that's another reason to maybe it's going to push higher. So that's just kind of in your favor there. But I did mark that one green. It's risky. It's not. If you're a new trader and you're not profitable, or you're just trying to get profitable, that trade's not for you. So make sure you understand that. You get your break here, couple of moves up, and then it's still, there's a lot of momentum, but the selling is really coming in strong here. We've tested this multiple times. This looks too congested here, but we finally push lower, and it looks like we get out of the congestion. You clearly got two legs up there. If this hadn't closed back inside, I wouldn't even mark it because you're still making higher highs here. But I do like this one. It's pretty low risk. I think can't remember exactly how many ticks. 6 ticks. I mean, you can get in that with 8 tick rule. Better off to wait on the lower high, which comes here. Again, you can get in that with almost the 8 tick rule. There's 7 ticks there. Doesn't get any better than that. And we get this spike down, and then we go into this channel over here. I just don't see anything here that you can really get a good entry on. Of course, you get the break and new low on this khaki one, but you still got the green one to go, and we do get a break here, and it's clearly a 2 legs back to the EMA, second entry short, nice signal ball on the first close outside. Take that trade. And again, it's almost a perfect 2 legs down. And even though by the counts that's a first entry, second entry, third entry, I would call that a second entry because that's all still part of the same move. If you went to a bigger chart, it would look like you'd see a second entry here. So again, you got the break and new low. This is extremely, it's risky trying to pick new bottoms. So you really need to wait on a high or low right there. And that's the other thing. There's really two swings in there. So this is like a leg down and then a two-legged correction and then another leg down. So that's really, on a bigger picture, that's a second entry. So a nice signal bar way away from the EMA, but again, that's risky. That's for more experienced traders that are profitable, that can read the chart really well, and most of you should just ignore that. And of course, we turn back down off the highs, but we don't get a setup here. I mean, that's a triple test, but look at that. It's not a signal bar, and it's very congested. But it runs down, we get a break. And again, you get two legs. You don't quite make a new high here, but I think you can still go short right there. It's clearly a second entry. Big, and it broke higher and failed and turned down. It didn't go out the other side, or you could have traded on the engulfing bar. But if it breaks below that, it's probably going to run back down here and at least test this. And notice what happens. You get a triple test down here with a high or low. I like going long there. And that technically, that's a second entry. It's two legs down. And there is a double top here, so that's like a new high. So first entry, second entry, and this one's slightly lower. You could actually argue that's a triple test there too. That's another reason to like that short. If you draw your line, you try to go up 1, 2, 3 times, and then that's a second entry short, high signal bar, and then you get your triple test down here and a high or low. Can't trade that one on the engulfing when there's no body there. Wait for that to close. If it closes bullish, go long right there. Boom, look at it go. And that takes us in 230. A lot of movement and reversals today, but this was a much easier day to read. Lots of second entries. Couple of triple tests at support or resistance levels. I think this was a fun trading day. These are the kind of trading days where you get a lot of movement and you get a lot of reversals, but it's still relatively clear to read. It's not one of those real difficult days where nothing makes sense. You got to be really good before you understand what's going on. This was not one of those days. This was relatively easy to read. If you struggled, doesn't mean anything. Just means you need to study and practice and get more repetition. I say this a lot. People miss it, though. You can learn the strategy. You can learn the basics of what we do and be pretty good at seeing it after the fact, after 6 to 12 months. Some people can. I shouldn't say everybody can, but a lot of people can learn it in 6 to 12 months. But the real key is you need a lot of practice and repetition, and that's where the time factor comes in. So just because you can read the chart, just because you understand what's going on, it doesn't mean it's time to go live. Get on the simulator, sim trade, taking every trade you see that you think meets our criteria. So meaning you'd want to take every one of these trades that I marked here, even the green ones, and just let them play out. Don't monkey with them. Just you're either right or wrong. And at the end of the day, go back and study them. Figure out every trade, what happened, what you missed, what you did right, what you did wrong, what you missed, what you saw. And I can't tell you how that helps you. And I say that all the time, and people, I've had people make the comment to me, I can't believe you would tell me a rookie thing like that to go back to sim. Or I've got this, but you're not if you're not profitable yet, you don't have this. I don't care how long you've been doing it or how good you think you are. If you're not profitable yet, you don't have it. You still need to be sim trading as much as you can, because that's where you get all the experience. If you're just trying to trade live and taking a couple of trades a day, you're not learning anything. You're not getting enough screen time and experience. You're wasting a lot of that. Yeah, watching the chart is good. Sitting here and seeing it is good. But taking those trades and studying them is the key. And I just don't know what I have to do to get that to drive that home to people. Everybody wants to go live as fast as they can. And all you're doing is you're driving yourself to be a donor. You're going to give the market more and more and more of your money. If you can't do it on the simulator, you can't do it live. And the other thing is you can't cheat yourself on the simulator. And you know what I mean by that. You got to trade exactly on the simulator like you would when you're trading live. If you can only trade one contract live, you can only trade one contract on the simulator. And if you can only trade two contracts, if you only got enough money in your account to trade two contracts live, then you can only trade two contracts on the simulator. And you can't double down, you can't move your stop, you can't do any of that stuff, because if you do, you're just cheating yourself. Because it'll work, it might work once or twice, but eventually you'll get burned on it and you'll reinforce some horrible, horrible habits that will drain your account and ruin you before it's over. So don't cheat yourself. Now you know what I mean by that. I want to read you one email I got because it just reinforces what we're talking about. So hold on one second. I'm going to find that email. I'm going to read it to you, and then we're going to wrap this up. Okay, I wanted to read this email. This trader wrote to me and says, "Hey Mac, I started doing exactly like you said below with my study, and it's amazing how I started seeing my trading habits when I just took sim trades. I felt I met the rules rather than just sure things or whatnot." Basically, he'd written to me and asked me what could he do different to get better, that he felt like he was spinning his wheels. And I told him the same thing I say on this video, and I tell everybody: sim trade. Take every trade you see. Don't worry if you're wrong or right. Then study, study, study. That's all I told him. And anyway, so he says, he's writing back, and he says he goes into something about his personality. He worries a lot about things. It's just his personality, can't help it. And he found out that worrying would transfer over into his trading. He said, I could see how I would try and tell the price action what it was doing instead of following it. It was actually very amusing to notice my personality trying to trade the charts rather than using our rules. Not sure if that makes sense, but it made me realize the price action absolutely does not need my influence or worry to impact it. It's going to do what it does, and I just have to follow the rules. It's almost comical for me to state that because of how obvious it is, but I was actually trading that way and had no idea until the past 4 weeks when I adjusted my study to identify my habits. Anyway, by doing what you suggested, I've improved more over the past month than over the previous 3 years. And what did he do? He just started sim trading, taking all the trades and studying his trades. And let me read that again. Anyway, by doing what you said, I've improved more over the past month than I have over the previous 3 years. If people would just listen, and I know there's people listening right now that'll do this for a week and stop and think they got it and go trade, and if they just keep doing this long enough, they would save themselves a lot of heartache, a lot of lost money, and a lot of wasted time. Get on the simulator, sim trade, take every trade, and then study, study, study. Figure out everything you did right, everything you did wrong. Don't give up on a trade until you see why you were wrong. And if you can't see why you're wrong, get on the forum and ask a question or send it to me, and I'll try to help you with it when I can. That's how you get better at this. You sim trade. Most of the time you'll figure it out on your own. You don't need me to tell you, hey, did it work? Was it right? But I never fail. Somebody will send me an email and says, I know this seems a little risky because I did this, or this, but what do you think? Well, if you think it was risky, it was risky. You don't need me to reinforce that for you. So don't waste your time or my time by that. You know, most of the time you know. And if you don't know, then you're just guessing anyway, and you're not really there yet. So if you don't really know if a trade was good or not, then you're not there yet. That's your answer. And that's the answer I'd like to send back to people, but I don't do that to people. I always try to help them. But that's what I want to tell them. If you're having to ask me if that's a good trade, then guess what? You're not ready. When you're ready, you won't have to ask me. You'll know. You'll get reinforcement by whether your trade was right or not. And, everybody gets lucky occasionally. But when you get good at this, you don't get lucky because you know. And you're either right or wrong. And as quickly, if you're wrong, you know what you did wrong. You took a chance, you pushed the envelope, or you got fooled, you missed something. And that's what happens 99.9% of the time with losers if you're good at reading the chart. So there's one more email I want to read, and I'm going to wrap this one up because this is a really interesting one. Some of you will know this trader most likely. I won't call his name, but you may know him. And when you read what I read, you might even know who he is, especially if you're in our forum. So hold on one second. Okay, this is just a thank you email, but emails like this are why I do what I do. Why I spend my time doing this, still trying to pound this into people's heads after 25 years. You know, I love trading and I love what I do. And trading is a very lonely and very boring job. So this part of this, the main reason I do this is because I made a commitment to give back, and this is my way of giving back. If I was successful with this, I wanted to give back, and that's the number one reason I do this, to give back. But also because it is boring, and you can't go to forums, you can't go to discords, because you're just going to get nothing but bad information in those places, because there's no profitable traders there. If they are, they run them off, because the profitable traders will not be talking the same lines that the know-it-alls that think they're the great traders but they don't make any money, because they know all the all the buzzwords and the stuff that's pounded in your head that's absolutely necessary, that's total BS. But anyway, those people will run off anybody that really is, because they'll make them look they'll argue with them and tell them they're wrong, and because everybody else has read all this stuff this know-it-all trader says, they believe it. But so profitable traders don't hang out at these places, so don't listen to these people, don't waste your time there. But this trader writes me, "Dear Mac, this is," I'm just going to say, Trader X. "I hope this message finds you well. I wanted to take a moment to express my deepest gratitude for the invaluable guidance you have provided through your PAT strategy for trading ES futures. The knowledge and insights you have shared have had a profound impact on my trading journey over the last 4 years, and I feel an immense sense of indebtedness to you for all that I've achieved. Your teachings on both your website, forum, and through your YouTube lessons have been nothing short of transformative. The clarity and depth of your explanation and power." This is not why I'm reading this, but this is just stuff he's saying, and I really appreciate him saying that too, though. But because of your dedication and generosity in sharing my experience, I've been able to reach levels of success I once only dreamed of. Words cannot fully capture. Okay, I'm going to skip through that. Again, he's just being thankful and grateful, and I appreciate that. I do. I don't want to skim over that, because I am grateful that he takes the time to write me, because I usually don't hear so much from the people that have success. You hear from all the negative nannies, all the whiners and the complainers and know-it-alls and losers. That's the people you mostly hear from, the people that are struggling. People that are doing well are going about their trading, and they're busy trading and making money. So I appreciate it when people take the time to come back and share their success, because otherwise sometimes I get down and out from all the complaining. But anyway, this is the part I really wanted to read you. I am currently trading 20 funded accounts with the Apex proprietary firm. Today I achieved a combined net profit of over $50,000 in 25 trading days. And he attached his screenshot here. I won't show that, but trust me, it's there. This success wouldn't have been possible without your teaching, so thank you. But thank you for taking the time to write back to me, this trader. Again, some of you may know who he is. I'm sure he's, you might have seen him talking about his success here in different places. But that's pretty incredible. 20 funded accounts, a net profit of $50,000 in 25 days. That's basically $50,000 a month. If he can duplicate that over a year, how much is that? 12 times 50. That's $600,000 a year. For a part-time job, trading a few hours a day. It doesn't get any better than that. And that's the kind of success you can have if you get there. That's why this is worth the time and effort, if you're doing the right things. If you're just trying to go live and you're wasting a lot of money and losing money and donating all your money, and you're spinning your wheels. No, it's not worth it. But if you want to put in the time and the effort, and you're doing it on the simulator where you're learning, improving, and getting confidence, that's totally different. And that's what you need to be doing until you're profitable. And I just can't get people to understand that. People will argue with me. I've had people get mad, fighting mad at me for suggesting that they do something a rookie move like go back to the simulator. And I just shake my head when I hear those kind of things. And you're missing the boat if you're not on the simulator taking every trade. And when I say on the simulator, I mean on trading live, real live data coming straight from the what's the word I'm looking for? From the exchange. I don't know why I couldn't think of that. But you want to be trading that kind of data. Not, I mean, if replay's all you got, it's better than nothing. But you need to be trading live data during regular trading hours and getting as much of that trading time as you can every day, taking every trade. Because it's all about study, practice, and repetition. How do you go from learning to play the piano to being a professional piano player? Unless you just got this innate skill that very few people have. Trust me, there's always people that have an innate skill to do things just naturally. And so there's musicians that can just play naturally. I got a good friend that he can play by ear, and he can sit down and play anything. And I can't carry one note. It's like foreign language to me. I can't do it at all. But he's got that skill. I don't have it. But I have the skill to read this chart. That's a skill I've got, and he probably may not can do that. But some people have that innate skill, but most people have to learn a skill through study, practice, and repetition. Most of you, to be a professional piano player, you got to learn to play first. And that's where I teach you. I teach you the notes and how to read the music and how to put it all together. But how do you go from that point to being able to play professionally? Study, practice, and repetition for years and years and years. That's how most people get to that point. And studying is no different. I can teach you how to read the chart, the basics, what the rules are, and all the rules do are take common sense. If you try to use common sense in reading this chart, you will fail miserably, because prices don't move based on common sense. They move in a special way, and our rules are designed to help you understand those movements. Nothing more. That's what they're there for. And so I can teach you all that part, but the rest of it you have to learn through study and repetition. And that's done on the simulator every day. And you can't get enough of that. You can never get enough of that. Even when you start to make money, it doesn't hurt you to get on the simulator and still keep trading. And taking as many of the trades and studying them, because it only makes you better. But anyway, that's enough for today. I'm going to wrap it up. I hope you had a good trading day. I hope something we said today was helpful to you. I hope something in the chart lesson was helpful to you. That's why I do these. Did the chart lessons alone make you a great trader? No, they just help you along with to shorten your study time to see if you're seeing the same things I did, then you're close. And you don't have to see it exactly like me. As long as you get the same results, it's close enough. But anyway, I hope you learned something. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.